I started this week at Foundations of Energy by writing about midstream oil and gas. The title of the post was Midstream is the belle of the oil and gas ball right now. And the motivation for that post was if you look at the performance of S&P 500 energy companies since the middle of July, you'll see that midstream oil and gas is dramatically outperforming anything you find in upstream or downstream or oilfield services. And there's a reason that midstream is loved by investors. In fact, I think there were 22 S&P 500 energy companies. The top four were all midstream oil and gas, and those are the only four that exist in that index. So they all showed up at the very top. And then you had 15 of the 22 energy companies that have actually had negative stock price movement since the middle of July. So it's pretty dramatic what's happening in midstream oil and gas versus the rest of the energy sector. And these four midstream oil and gas stocks have outperformed the S&P 500 on the whole, not just energy, but on the whole since the middle of July. So I wanted to write a bit about midstream oil and gas, what it is, why it's so protected from what is plaguing the upstream and the downstream sectors right now. And as I always do at Foundations of Energy, I go into, start from the very beginning and introduce the vocabulary, introduce the context. We really spend some time making sure that we understand what's happening. We're using real world examples so that we can build up, again, this foundation of knowledge that we're going to have across the energy spectrum. So that post was midstream oil and gas. I've covered upstream, I've covered downstream, I've covered solar and other renewables, and I try to cover the whole breadth of energy there, so we can all build our acumen as we go, using real world events as our motivation to jump into topic by topic. My second post this week was about how I met oilfield market research legend Richard Spears. This week, I met him at the Tomorrow Show, which was hosted by Kongsberg Digital. Richard was on one panel. I was on the panel that followed his. We were both talking about AI in energy. Him and his panel were offering a global outlook around AI and energy. My panel was offering an industry-specific outlook. And Richard had talked about how AI is going to help smaller, medium-sized companies compete with the largest companies. I was asked a similar question to him, and I actually called back on the panel to his earlier answer and said, in addition to leveling the playing field that way, my argument is AI is going to level the playing field for employees within an existing company. That we're going to think differently about the notion of creativity. More folks are going to be allowed to be creative. And we're going to, on a meta level, get creative about how we think about creativity. And that's really going to unlock a lot of the power that we're seeing it's possible through the use of AI. My third post this week was about Valero, and they're a huge independent refiner here in the U.S. that just released their third quarter earnings, and their margins collapsed. It was the lowest operating margin that Valero has reported in the past 14 quarters, and that was not at all surprising. The market has very much moved against petroleum refining. That was another of my recent Foundations of Energy posts where I wrote about crack spreads. And crack spreads are the difference between the price at which refiners sell gasoline, jet fuel, diesel, and all their other finished petroleum products versus the price they pay for the crude oil that they use as feedstock to create all these finished products. Crack spreads have been telling us that refiners are going to struggle. Sure enough, now that we're getting into earnings season, we're seeing the struggles that we all should expect. So it's not an issue of Valero somehow forgetting how to perform well as a petroleum refiner. This really is a pretty substantial market movement against the company. And I will continue to report on and analyze the results that we get in that sector, because it's pretty important to understand just the degree to which profitability is being squeezed. I had written that, if Valero produced the same margins this quarter that they had 4 quarters ago, they would have generated $2.5 billion more profit just in this quarter alone. So we're talking, it's truly a multi-billion-dollar swing for some of these largest refiners, which investors, of course, care a lot about. Each weekend, I send out a free weekly newsletter. It includes links to and summaries of all the research that I publish online during the week. That way you don't have to rely on any social media algorithms to surface that stuff for you. I also include an energy-related anecdote, insight, or observation that I don't share anywhere else. Even if you've seen everything that I've published online, you will still have something new to read in the newsletter. If you haven't signed up for that, hit the link. It's either in my profile. I'll put one down below. Likewise, if you're interested in Foundations of Energy, that's the learning and development newsletter that I built and host on Substack. I will put a link to that down below. I encourage you to check it out. As always, thanks so much for reading, watching, liking, commenting, and just engaging across the board. I appreciate all of it. I hope you had a fantastic week, and we will talk soon.